Tomorrow is Wednesday, 24th December 2025, and the Indian market is no longer drifting. It is compressing at a decision point. Today's session ended quietly, but that silence is deceptive. Nifty closed near 26,177. BankNifty remained locked inside its upper consolidation band. These are not random numbers. These are zones where markets either commit or retreat. Here are the only levels that matter for tomorrow. Nifty. Upside acceptance, above 26,300 to 26,350. Downside risk, below 26,000 to 25,950. BankNifty. Upside acceptance, above 59,500 to 59,800. Downside risk, below 58,800 to 58,500. And remember this, it overrides every opinion. The first 15 minutes tomorrow decide direction. Pause. Because today was not a trend day. It was not a reversal day. It was a compression day created by options and institutional positioning. When markets compress near resistance after a rally, it usually means energy is being stored, not released. Global market overview, why it matters for India. Global markets today were stable, not aggressive. US inflation expectations remain softer. Bond yields are not spiking. But equities are also not chasing higher aggressively. This creates a neutral to positive global environment. For India, this is ideal. When global markets panic, India falls regardless of structure. When global markets overheat, India becomes erratic. But when global markets are calm, India's internal structure decides direction. Asian markets were steady. European markets were mixed. There was no external force pushing India today. This means tomorrow's move will come from banks, derivatives, domestic institutional behavior. White right pointing backhand index India is trading its own structure right now. Indian market overview, what today really was. On the surface, today looked boring. Indices barely moved. Volumes were average. No dramatic candles. But structurally, today was important. This was a pause after strength, not weakness. Buyers did not exit. Sellers did not dominate. Volatility contracted instead of expanding. Weak markets fall fast. Strong markets pause quietly. Today was quiet. That tells us the market is waiting, not failing. Sector performance, rotation, not confusion. Sector behavior today gives us clues about where money is going, not where it is leaving. Autos and consumption stocks held strength, domestic demand confidence. Financials and NBFCs participated selectively, credit confidence, but cautious. IT stocks saw mild profit booking, rotation, not breakdown. Defensives and PSUs lagged, money rotating into growth cyclicals. This is internal reshuffling, not risk-off behavior. That supports the compression narrative. Top gainers and losers, what they signal. Top gainers, meaning retail and consumption names, confidence in demand. NBFC strength, belief in asset quality and credit growth. Select IT strength, short covering, not leadership. Top losers, meaning PSU banks and defensives, capital rotation. Some private bank underperformance, leadership still undecided. When leadership is undecided, ranges tighten. FII-DII activity, price, flows. Instead of obsessing over net numbers, observe behavior. Today. No aggressive selling. No panic buying. Supply absorbed smoothly. Markets distribute loudly. Markets accumulate quietly. Today was quiet. Technical analysis, Nifty, spot. Nifty is currently testing acceptance. Above 26,300, sellers lose control. Below 26,000, rejection becomes visible. Between these two zones, options dominate price movement. That's why tomorrow matters more than today. Technical analysis, BankNifty, spot. BankNifty is the engine of the market. Right now. Higher lows. Flat highs. Tight volatility. This is a coiled spring. BankNifty does not remain compressed for long. Above 59,600, momentum unlocks. Below 58,800, caution spreads across the market. Nifty options analysis. Now let's talk Nifty options, because this is where the real story is. Current option structure, conceptual. Heavy call writing near 26,300 to 26,500. Strong put writing near 26,000 to 25,900. What does this mean in plain language? Call writers believe upside is limited. Put writers believe downside is protected. Option buyers are trapped in between. Market translation. Inside this range. Premium decays. Option buyers bleed. Time works against momentum traders. Outside this range. Writers unwind quickly. Direction accelerates sharply. This is why 26,300 on Nifty is not just resistance, it is a trigger. A clean move above it forces call writers to cover. A breakdown below 26,000 forces put writers to exit. Until one side breaks, volatility stays compressed. Bank Nifty options analysis, detailed and separate. Bank Nifty options are even more critical. Current option structure, conceptual. Call OI concentration near 59,500 to 59,800. Put OI concentration near 58,800 to 59,000. This tells us call writers are aggressively defending the upside. Put writers are confidently defending the downside. Why this matters? When both sides defend strongly, movement slows. Premium decay accelerates. Frustration builds. But Bank Nifty does not stay like this for long. Once 59,600 breaks with volume, call writers rush to cover. Momentum expands fast. Nifty follows. If 58,800 fails, put writers unwind. Defensive selling starts. Broader indices cool off. White right pointing backhand index Bank Nifty will decide the next market phase. Market psychology, the silent build-up. Today's psychology was professional and patient. No panic. No excitement. No urgency. This is exactly how markets behave before expansion. When everyone waits, moves become violent. Important news and drivers, what did not happen? No negative macro shock. No global sell-off. No domestic policy surprise. The absence of bad news keeps downside pressure limited. Tomorrow's market outlook, how to approach. Tomorrow is not about prediction. It is about reaction and confirmation. Nifty. Above 26,300 continuation bias. Below 26,000 range pullback. Bank Nifty. Above 59,600 leadership returns. Below 58,800 consolidation resumes. Watch. First 15 minutes. Bank participation. Option unwinding. Watchlist, educational signals, not tips. These stocks act as thermometers. NBFC leaders credit confidence. Retail leaders demand confidence. Private banks market leadership. IT majors global sentiment. They will tell you what the market believes before indices move. Why option compression precedes big moves. When both call and put writers defend aggressively, volatility drops. Opinions rise. Traders get impatient. Then one side breaks, and the move becomes fast and emotional. Today was not the move. Today was the setup. Market is compressed. Options are tight. Banks are coiled. Tomorrow decides whether this becomes a continuation or a rejection. No prediction. Only structure. Only confirmation.